Gerald Celente's warning: what's coming is worse than a recession. Economic turmoil, a stock market in crash, and even the potential for World War III. Are we on the brink of a catastrophic global meltdown? In today's video, we'll be driving into the chilling predictions of market veteran Gerald Celente, who has a history of accurately calling financial collapses. Stay tuned to find out what he believes is in store for us in 2023 and beyond, as we take a deep dive into each aspect of his alarming forecasts. Gerald Celente, a 40-year-old market veteran, has a track record of accurately predicting major financial events, such as the 1987 market crash and the burst of the dot-com bubble. In a recent interview with Kitco News, he warned of a potential market meltdown in 2023 that could escalate the global conflict beyond the ongoing Russia-Ukraine crisis. According to Celente, high interest rates and the tightening of financial conditions are the primary drivers of this impending catastrophe. Let's look closer at the potential causes and implications of a market meltdown. With the S&P 500 dropping 20% last year, it's evident that high interest rates have already significantly impacted stocks. Many experts believe that the central bank could overdo it and unintentionally trigger a recession and stock market collapse. Gerald Celente points out that interest rates are the only thing keeping markets afloat, and if they continue to rise, markets will inevitably tumble. When all else fails, they take you to war, Celente warns. But what exactly is the relationship between interest rates and the stock market? When interest rates rise, borrowing money becomes more expensive, leading to decreased consumer spending and business investments. This in turn can result in lower corporate profits and a decline in stock prices. Additionally, higher interest rates can make bonds more attractive to investors, leading to a shift from stocks to bonds. The idea of a new world war may seem far-fetched, but Celente isn't alone in his beliefs. Numerous Wall Street commentators argue that World War III began with Russia's invasion of Ukraine. The increasing economic turmoil could lead to the conflict expanding, potentially involving more countries and further destabilizing the global economy. In times of economic distress, countries often resort to protectionist measures, such as trade barriers and tariffs, which can exacerbate existing tensions. Moreover, economic hardships can breed social unrest and increase the likelihood of political radicalization, which could fuel international conflicts. Although banking giants like Bank of America, Morgan Stanley, and Deutsche Bank predict a 20 to 25% drop in stocks this year, a more severe outcome hinges on the Federal Reserve's actions. If the Fed follows through with its plan to hike interest rates, Celente believes we'll witness a market meltdown. However, he also suggests that the Fed's plan could be a bluff, as he doesn't trust their statements, especially after their erroneous claim of transitory inflation in 2021. But what if the Fed is bluffing? If they do not follow through with their planned interest rate hikes, they risk losing credibility and sending mixed signals to investors, which could result in further market instability. Over-leveraged households and financial institutions may struggle to cope with rising borrowing costs. This could lead to a domino effect of loan defaults, financial institutions failing, and a credit crunch that could choke off economic growth. Furthermore, high levels of corporate debt could lead to increased bankruptcy filings, resulting in job losses and reduced consumer spending, exacerbating economic downturn. Another potential disaster Celente warns about is the commercial real estate crisis. As remote work becomes more prevalent and businesses reassess their need for physical office space, demand for commercial properties could plummet. This decline in demand could lead to falling property values, resulting in massive losses for investors, developers, and lenders. In times of uncertainty, investors often turn to gold as a safe haven. Celente recommends gold as the best investment option amidst market volatility and predicts that its value could reach $2,000 to $2,500 per ounce in 2023. With gold currently trading at around $1,921 per ounce, this could present a significant opportunity to those looking to protect their assets. Historically, gold has been a reliable store of value and a hedge against inflation. As central banks print money to stimulate economic growth, the value of fiat currencies can decline, leading to higher inflation. In such scenarios, gold can act as a buffer, preserving wealth and providing stability to investment portfolios. While gold has long been considered a safe haven during economic crisis, cryptocurrencies have emerged as an alternative investment option for some investors seeking to diversify their portfolios. Digital assets like Bitcoin and Ethereum have gained traction in recent years due to their decentralized nature and potential for significant returns. However, cryptocurrencies are known for their high volatility, which could make them a risky investment in times of uncertainty. That being said, some experts argue that digital currencies can act as a hedge against traditional financial systems during economic downturns, as they are not directly linked to any central authority or government. As the world faces potential economic turmoil, it's important to weigh the pros and cons of various investment options, including cryptocurrencies. By considering the potential risks and rewards, investors can make informed decisions and build a balanced portfolio that reflects their risk tolerance and financial goals. Gerald Celente's alarming predictions don't end with a potential war. He warns of other economic troubles, including inflation, recession, and a commercial real estate crisis. The convergence of these factors could lead to a perfect storm of financial chaos, further straining global stability. Inflation erodes the purchasing power of money, leading to higher living costs and reduced consumer spending. Persistently high inflation can cause businesses to cut back on investments and hiring, potentially leading to a recession. Meanwhile, a commercial real estate crisis could lead to a significant decline in property values, causing financial institutions to suffer losses on their loans and investments in the sector. The combined impact of these factors could create a negative feedback loop, with each issue amplifying the others and causing a downward spiral in the global economy. While it's crucial to remain hopeful, it's equally important to prepare for the worst-case scenario. Given the gravity of Celente's predictions, individuals and businesses alike should take steps to safeguard their financial futures. This could include diversifying investments, paying down debt, and increasing cash reserves to weather potential storms. Moreover, individuals can focus on building their skills and enhancing their employability in case of job losses during an economic downturn. Businesses, on the other hand, should consider cutting unnecessary expenses, streamlining their operations, and exploring new markets to remain resilient in the face of adversity. In the face of economic uncertainty, adaptability is key. By staying informed about global events and financial trends, investors and business owners can make more informed decisions, pivoting when necessary to mitigate risk. By being proactive and adaptable, it's possible to navigate through turbulent times and potentially come out stronger on the other side. For instance, businesses can explore innovative technologies and solutions to stay ahead of the curve, while investors can remain vigilant to new opportunities and market trends. Additionally, both individuals and organizations should prioritize building strong networks and cultivating partnerships to increase resilience in times of crisis. Gerald Celente's predictions may be alarming, but they serve as a vital wake-up call for governments, businesses, and individuals alike. As we face the potential of a market meltdown and global conflict, it's crucial for leaders to prioritize diplomacy, cooperation, and sustainable economic policies to prevent further escalation and promote global stability. It's also important for governments to invest in social safety nets and support systems to protect vulnerable populations during economic downturns. This can include unemployment benefits, healthcare access, and educational opportunities. By addressing income inequality and promoting social cohesion, countries can mitigate the risk of social unrest and political radicalization that could contribute to global conflict. The prospect of a market meltdown in World War III is undoubtedly distressing. However, by staying informed, adapting to changing circumstances, and taking steps to protect our financial futures, we can better prepare for whatever lies ahead. While no one can predict the future with complete certainty, it's essential to take heed of experts like Gerald Celente and brace ourselves for the potential challenges that 2023 may bring. In conclusion, let's remember that crises can be catalysts for positive change. By fostering a spirit of resilience, cooperation, and innovation, we can collectively overcome the obstacles ahead and work towards a more stable, prosperous, and peaceful world. Thank you for watching today's video on Gerald Celente's alarming predictions for 2023. Don't forget to hit the like button and subscribe to our channel for more insightful content. We'd also love to hear your thoughts on Celente's predictions. Do you think we're heading for a market meltdown and potential world war? Let us know in the comment section below. We'll see you in the next one. Until then, stay tuned. Peace.